in Turkey have adopted very similar measures.
Sajid, I'm just going to come back to some of those points. Just stay with us. Ms. Kiran Mazumdar Shaw, Biocon is addressing the press after numbers were announced yesterday evening. Let's cut across.
13%. Overall, a very, very strong performance. I just to comment that we continue to invest in our R&D for better outcome. And in terms of a percentage of our biopharma business, our R&D spend represents 10% of our biopharma business. Now, I'd just like to spend a little bit of time by saying that we have recently undergone a restructuring of organization, and this new organization structure, which is really about creating profit centers and P&L responsibilities in key business verticals, is really now helping us to focus on our clearly identified verticals, which actually indicates the kind of strong performance you have seen this quarter. Our biosimilar insulins business continues to do extremely well, riding on the back of an increased geographical footprint in emerging markets. I think this is a very important business for us, and I think Biocon's insulins are really doing extremely well. The India-focused branded formulation market business is also delivering very strong. Having said that, I must bring it into context that the Indian market has seen some challenges on the basis of pricing confusion in terms of policies and pricing kind of issues where stockists have been reluctant to take stock on hand until the pricing is kind of resolved. So every company has been challenged with this kind of issue, and we have seen that there has been an overall industry decline, and unless the policies and pricing issues get sorted out, it won't resume back, but we are beginning to see that there is now beginning to be a resumption of the same original pace. Having said that, Biocon has grown ahead of the market and ahead of most peer companies. So it tells you that we are making very, very good progress on our branded formulations business. And this quarter, the coming quarter, I think all of us at Biocon are extremely proud and excited to see the launch of our second novelogic, Alzumab, which is expected to take place in early August. As you know, Alzumab or Itolizumab, which is the generic name for Alzumab, has been an extremely important R&D program for us. We have seen very, very promising and strong data in our psoriasis trial, on the back of which we got India approval, and we are now, of course, looking at taking this molecule global, and we are in discussion with several interested companies who are very keen to partner this program in our global development plans. We also would like to focus in the current fiscal to accelerate our performance across the SBUs, and particularly we see good progress in our biosimilars. Like I mentioned, I think insulins will be a strong growth driver this fiscal, along with branded formulations, research services, and basically I believe that we are still seeing some very challenging environmental conditions in India, especially around regulatory aspects of the pharma biotech sector. We hope that the government will really address these with a sense of urgency, because we are seeing that although clinical trials are resuming, I think we address all aspects of clinical trials and make sure that it becomes an environment where there is regulatory robustness. We don't want more of layers being put into approvals, but rather have the expertise and the knowledge with which to approve clinical trials expeditiously. Otherwise, Indian industry is going to lose its advantage. I think we need to also focus on other aspects of incentivizing Indian pharma sector in terms of export benefits, because I think the depreciating rupee is actually giving us a huge export opportunity, and the Indian pharma sector is a strong exporter of products to global markets, and we really believe that the government needs to take advantage of a weak rupee and incentivize Indian industry to augment exports. The pharma sector also has another challenge where, SEZ, for instance, we have been asking the government to extend the SEZ tax benefits by 2 years, because we are at a disadvantage as an industry, given the fact that we are not able to fully leverage our investments in these SEZ facilities, given the kind of contingencies that we are required to address in terms of exports and based on regulatory approvals, and most of these regulatory approvals take at least 2 to 3 years after starting operations. So I think it's very important for the government to recognize that. At an industry level, we have asked the government to extend SEZ tax benefits.
Impact will be restricted to the net increase in portfolio outstanding. To be precise, we don't assess that the provisioning for the next 3 quarters could exceed 2 quarters, will not exceed 2 crores per quarter, so one could see a joy of 8 to